Hello everybody. Hi, how's it going? It's now December the 10th. It's about 4 p.m. Central Standard Time here in Manitoba, Canada. And it is freezing outside. And I just wanted to let you guys know something quickly about Binance, okay, if you guys are not familiar with it. We're going to paraphrase it very, very quickly. Binance invited me to participate on their new futures market with an amazing exchange that's about to come up. And I'd be more than honored to actually participate in this right here, okay? So what they plan to do is launch a new futures market that's going to allow traders to trade up to leverage up to 125 times. My opinion, that's fairly big news, and I'd be very, very happy to be a part of it, to give you guys my insight as well, because as you guys know, I'm a fairly high leverage trader, especially on Bitfinex. So yeah, let's get into this. Let's take a look at this and always respect your guys' time. Because you know what? I'm going to always keep it short and to the point. I don't want to have these 1-hour videos any further. So let's respect your time and let's respect mine and make sure that we condense this in the most small format possible, okay? So something happened last night. How do you tell? Go, click on market cap once you go to coin market cap, okay? Once you do that, go to daily right here. And then you can easily see that yesterday on December, like actually earlier even on the day there, today around say, or yesterday at 10 o'clock at night, $200 billion, 500 million, okay? 200 billion, 500 million. Today we ended up dropping to a low of 196.5 billion. Fairly significant drop in my personal opinion. Let's take a look at the other coins as well to see how they are faring against Bitcoin's drop and to see if any are capitulating much more than the others. So we see that Binance coin right here is taking a huge hit right now. Tesla took a massive hit as well at 4.4% drop. But what we see from this chart right here is that Bitcoin is dipping down on the 7-day graph, right? Which means inevitably there will be some curvature to the upside for a small time bounce. Ethereum leads the exact same way, which is proportionally correlated to Bitcoin. XRP is showing the first sign of some sort of curvature to the upside, and the question is, will it hold? Binance coin or Bitcoin Cash, same type of geometry or shape, we can say. Litecoin takes the biggest dip over the longest period of time. Binance coin takes a parabolic dip to the downside because of the curvature right here that looks concave. Whereas you look at XRP, it looks like now it is about to convex. Here, let me show you guys the difference. Ready? Okay. Think of this like a cave right here, all right? This is a cave, right? That's concave. Like cave. This is a convexed shape, okay? Make sense? So just think of cave like a cave and convex the opposite of that. Why is this important? Because it can define the curvature of a graph, of a chart. And when you do this technical analysis, you're going to be able to identify these S-type curves that could show you a momentum change. So today's technical analysis will be solely focused on the basics of the indicators that I use, which will be histogram, MACD, RSI, price action, and moving average. And then later tonight, we'll get into the more advanced technical analysis where we will see where this wave 4 is breaking down and how it could affect finding a support and a resistance. All right, so even looking at a quick scan for a brief moment of time, let's say we ended up going over here to EOS on a higher time frame, such as daily. What we're seeing right now is we are absolutely fighting at this major support line. And the question is, will it hold? Okay, we're seeing this beautiful support right here. And if it does hold, it might be significant of a bounce. So EOS is absolutely on my mind right now, as it should be on everybody's mind. What shape is this? That's a convex shape. That's right, if you said that. Notice how this is curving around like a convex shape. That is absolutely beautiful. So if this were to happen, EOS will be on my mind. Let's take a look at XRP, the one that's finding the most support thus far. Why is it finding the most support? I personally believe I've drawn this since November 2018 actually. It's been on it for a very long time on this original chart. And right now, we see that over 300, about 1 year on the nose about, the support is still holding thus far. We are in a very, very congested region where between 20 cents and 25 cents for XRP, we're finding this slow support. So I'm interested in XRP as well. I'm interested in almost all alts. Ethereum. Sorry about that. I know the vibration is really loud on the phone against the microphone there. Ethereum is doing the exact same thing. Check that out. As EOS. Litecoin, not even looking at it, to be quite honest. This is me saying that, but I'm sure that not a fan of Charlie. Put it that way. Litecoin has a lot more to move down. Okay, now let's get into the Bitcoin technical analysis. Alright, let's get into this Bitcoin technical analysis in high detail. And we're going to move down the line from the month chart. Don't mind my voice, guys. Throat's been extremely dry because of the weather, and I don't have a humidifier here. So that's something on the list that I'm definitely going to be getting. So we take a look at the monthly, and unfortunately, we've now moved officially to the negative side in this December month, and it has only been 10 days in. There is a chance for it to possibly cross over, but unfortunately, there's more of a chance for it to do something like that, doesn't it? These crossovers, when they do happen, they're always significant to the point that they must be respected. Okay, so now if we take a look on the monthly chart right here, we see that the 21 moving average is one that we're contending against right now, that is being sandwiched in between also the 8 EMA. Let's go to the weekly and see what we see. RSI wise, cannot get a higher high, of course. It doesn't really matter too much right now for day traders and that's where I focus the majority of my attention. Taking a look at the MACD and the histogram, we see that on the weekly chart, it has attempted to cross over to the upside, but just based on that curvature alone, it was very evident that this concave type of feature that we see on the chart was more likely to move to the downside. Taking a look at the weekly, we see a steady movement to the downside right now. Will we find some sort of support soon? We need to. Otherwise, all bullish sentiment will be gone for the rest of this year. Right, this is right pretty much W where it starts, X, and then another A, B, C, right here. Very, very obvious in my opinion. Another X, and now searching for another A, B, and a C for the Elliott wave. On a 3-day chart, we're seeing that we attempted to break to the upside, but that attempt was quite futile. We really did think that it was going to break to the upside. A very classical formula for breaking to the upside looks something like this. Where we first of all get a crossover, there's something like that, and then one back to the downside, and then this one right there is the one that we want to be focusing on. Let's make this green for a little bit more of a friendly color. I'm in a very serious mood today, guys. My lady finally went home for the first time. She's kind of moved in already. But it's actually nice to be able to focus on technical analysis. Sorry for adding a little bit of a personal reference in there. It's always good to stay warm during the holidays, if you guys know what I'm saying. So this formula right here, it looks like a great setup. What about right here? Is it going to happen soon? Let's extrapolate this data and see what we can come up with let's just say that we assume the exact same type of symmetry as this one right there, and same type of direction with the same type of magnitude. And then we also add it right here as well, where a crossover could possibly happen. Is that an area of interest we would like to see? Answer is yes. This is the exact same setup right now, and on the 3-day, it needs more time. RSI is finally getting a different type of curvature, I would say. Rounding it up. Probably going to hit the lower end one more time. Perhaps the curvature will change like that. And then, if you extrapolate some data, hey, you never know. Could be breaking to the upside. On the 3-day chart right now, what I do see is a leveling off of the RSI and a possible change in the RSI as well soon, and especially in the same MACD. Okay. Now we take a look at it based on the moving averages, and we can clearly see that it's being absolutely sandwiched right now between the 55 EMA and also the 200 moving average. Now the big question that everyone's wondering is this 200 moving average going to hold? Extrapolate a white line. Simple. Enlarge this as well. Get closer. We see that it has, first of all, created a huge wick right here with a huge hammer. This hammer candle is very bullish, and it actually ended up going up about 8%. That's pretty big for a slower type of time, or excuse me, burping. Slightly bullish for that particular time period. And of course the bulls push back up to the upside, but the trading range ends up remaining at the $7,800 range. And then we break to the downside again. The bears absolutely push right here down. And then we get a wick. And then what we see right here is that we push to the upside again, and then we get a wick to the downside on the 200 moving average. Push to the upside again, but the volume ends up dwindling, which was very significant that this was eventually going to happen and inevitable. And now let's move down to the 2-day chart and see what we see. What do we see? Well, actually, let's wrap this up quickly first. Now, because we have rejected so many times, 1 time, 2 times, 3 times, 4 times, which was a period of 12 days where we were fighting to the downside, we can easily deduce that this particular price point right here, around the $7,350 range, is a very large area of contention where the bulls and the bears will be pulling against each other. And now we take a look at the 2-day chart. We see right here that there is a steady flow to the upside, but you look at it very closely, it's stalled. Here is a very, very linear move to the upside. But if this counted as 2 days and then this counted as 2 days, this is what happened, and this is the story that we can tell based off of price action and histogram combined. We see a steady increase on the MACD, right? Here, we're seeing a steady increase. If you look to the right side over here, you're going to see it 178, 157, right? 121, smaller step up, right? 123, 109, 100, right? Very small increases. Whereas from here to here to here, they were large. And then the bulls, if you look at this particular line right here, we're going to compare it so you can see the comparison and the difference, which is basically right here, okay? So right here, very small increase, and then all of a sudden the bulls just decided to, bam, take over right here with a large candle from 7,100 to 7,681, which is a 6.5% increase. Therefore, we would have assumed, all right, the bulls probably ended up taking over a little bit right here. And then we ended up pushing very hard to the upside on the 2-day. And then what ended up happening was, even though we pushed up hard, about $400 or $500, we ended up getting a doji candle on the top over here. And this doji candle is very symbolic that the momentum has now been lost, and the next day can be deduced that it would level off just like this. Okay? Take a look right here. See how we're leveling off? And now the increase is absolutely done. So the next day that the next 2 days starts would be December the 11th, which is tomorrow. Therefore, today is the very last day of this 2-day candle. And then we will mark the next day for the 2 days after that. Okay? So now we're seeing a trend well below the 200 moving average, sadly. We keep getting a constant rejection as we move to the upside. Whereas contrasting it to the 3-day chart, and if we were to see it juxtaposed, we would see that the 3-day chart right here is actually hovering right above the 200 moving average. But compared to the 2-day chart, it's hovering well below the 200 moving average. So now the question is, are we going to get a golden crossover? Or sorry, I meant to say a death cross. A death cross is when, if we extrapolated this, just to give you a clear example, is when the 200 moving average ends up resisting all above. Okay? So right now, we see the 200 moving average supporting all of these other moving averages. And here, we see it resisting because it's at the top versus when it was at the bottom, right here. Okay? If this ends up happening, it could be nasty. So we will keep a very, very close eye for when this gets slightly closer to where we want it to be an area of interest. Looking on the RSI now, we're seeing it actually leveling off right here. Okay, at the 30. But doesn't mean it cannot fall well below that. If you take a look at here, you see a fairly steady decrease. You see a fairly decent leveling off there. But are we just going to go? Did this start a completely new one? So this one, if you just center it, sure, great, great. Broke to the upside. Is this going to start a completely new chain where we're just going to end up coming to the downside to a much lower RSI in these particular ranges? I don't know yet. Okay. So right now the MACD is looking like they could possibly cross over to the upside, okay? But we don't know exactly when yet. And keep in mind that if I were to extrapolate this data right here, extrapolate simply refers to taking a finite set of data and guessing the rest or filling it in with the best information that you possibly have. So if I were to do something like that on a red and a blue line, okay, you never know. But we don't know exactly when this will cross over. Histogram is drawing near. But if it does cross over, that's the one that we want. So once again, we're looking for a crossover to the upside and then back down to the downside and then back up to the upside. And this right here is the area of interest, right above here. Okay. So now walking down the line further to the daily, what we're seeing on more of a macro picture right here is this looks nasty. It looks like it's going to break to the downside. It's doing some sort of bearish flag at the moment. Does it not? Who knows if it does a bearish flag or even if it does some sort of ugly symmetric triangle. But either way, this to me looks more of a continuation pattern to the downside rather than to the upside. We take a look at the daily chart right now, and what we see is that it is resisting heavily right at the 21 EMA. In fact, it is resisting it's resisting even at the 8 EMA. That is how bearish we are at the moment, that we cannot even break positively or bullishly short term above the 8 EMA. Taking a look out on the RSI, the MACD is showing momentum to the downside. Now, something that this loves to do is this, as I'm going to mention again, because it's my favorite type of pattern. I think that a lot of people should learn it as well. So this particular pattern involves crossing up to the upside once, crossing down to the downside once, and then one back up. This right here is the perfect formula for me as soon as we find other confluent types of reasons to enter a trade. So right now on the daily, we are far from bullish. On the RSI right here, we're in a very, very much so neutral territory at 38.67, but more so bearish than bullish. And also for the moving average, we're seeing that this death cross happen already, but will we recover and perhaps bounce to the upside? So I'm going to give you guys all my thoughts at the end of this video, of course. Right now, we're more so formulating a general consensus based off of all these different charts on the different time frames and factoring all indicators as well, ranging from MACD to histogram to RSI to price action to moving averages. So in the 12-hour, I'm not interested in doing that on the 12-hour. Let's go to a 4-hour chart, see how we are. On the 4-hour chart, we keep seeing the same thing. We keep seeing that it's trying so hard to break above the 55 EMA, but it just cannot do it. And this has been going on right now for 2 solid weeks. And clearly we can also see this particular pattern that has formed already. And now if I were to go with that right here, okay, with the parallel line, you guys want to know how I did that? The first one that you draw like this, hold down Control, click on it, and then drag and drop it. That's how you do it. And we can clearly see that there is very much so room for another wave to the downside. And if we were to extrapolate this data, even based off of this channel alone, and if we factor in my Elliott wave count as well, guess where the target is? The target is around $6,200 to $6,400. But of course, we will find a reaction right around this particular price point at 6,600-ish range, because that's where the interim swing low was. Right now, if we do a Fibonacci retracement, let's see what we actually see. And the 4-hour does not tell too much right now, other than it looks incredibly bearish. Right now, if you take a look at it, that does not look that bullish, right guys? Every time we see these ugly type of formations on a downtrend, it just breaks to the downside again. We want it to level off. Or there are 2 different types, okay? It's very, very simple. Actually, 3 different types. One is you get a V-shaped correction. Bam! And if that happens, if there's a parabolic move down, there will be a parabolic move up. If you parabolically move to the upside, you will parabolically move to the downside too. Those are 2 different types of movements. And then there's the ones where it just drops steadily, right? And then it just curves slowly to the upside. And of course, there's the ones where, whether it's parabolically moving down or whether it's a steep curve down, there's some sort of elongated period where we will have to find support because accumulation period is now into play. And then you can get a jump. So there's many different ways that the market can move. I'm just giving you guys a small example, but I assure you there's many, many more. All right, I got to finish up this tactical analysis because it's time to go for dim sum. Okay, so now I'm looking at the 4-day chart as well. RSI is very much so on the low range. All right, so I think I've done this tactical analysis, guys. We're going to summarize this right now, and I'm going to give you a consensus of my personal thoughts and how the market could be moving or behaving in the next few days. All right. So my opinion is this: factoring out Elliott wave, factoring out any type of alternate counts, and sticking solely to RSI, MACD, price action, etc. in a more basic to intermediate one here. I would say that my prediction would be we won't break above here. I really doubt it. It's going to be really, really tough for us to break above anything here. 7,800-ish. This zone is a massive zone of contention, okay? Right here. That area is a no-go zone right now for me. I do not want to trade that zone. It's basically between here and these resistances that were formerly supports, okay? And that is the range between 7 now, basically, and 7,800. We take a look at the Fibonacci of just this particular structure, okay? We'll say just that one, actually. We're already at a dead cat bounce level. So, because we can't get any type of solid momentum to the upside with waning volume throughout the day, and the market cap also dropping $3.5 billion overnight, that's a very significant drop. That's a 1.75% drop in the overall market cap. And with the way that these indicators are pointing, there's no doubt in my mind that we are much, much more at a bearish level than we are at a bullish level right now. So my bias will stand for now. After doing a fairly thorough technical analysis with Elliott Wave and all these other indicators, I'm certain that we are bearish. When could we be bullish? We could be bullish once we take another wave down. But factoring outside waves, basically once we hit another support level here, it's very difficult to give a detailed prediction without Elliott Wave. I do predict one more leg down, and then we're going to see a fairly decent rise of this entire structure right here. Let's say we ended up getting to even 6,500. It's being extremely conservative. I would say that we could have a beautiful risk to reward ratio going to the upside of about 25% up to. And that is only a dead cat bounce level. But I do still predict one more leg down even on top of that after, which is very scary to hear. But if we get to this 8,000 range after we hit 6,500, there will be no doubt in my mind that there could be another massive leg down. So this ends today's technical analysis video. And for those that are still interested in my course, you guys need to consider picking it up. It will not be available for sale after this year. No matter what, it will be removed from Udemy. But the people that still have access to it, you will always have access to it on Udemy. Right now it's going for 180 USD by Ethereum or Bitcoin because Udemy does not allow me to process the type of coupons that I would like. Therefore, I'm forced to go with crypto. And if you do decide to purchase it, you'll get a download link. And everyone who has the original course 1, whether it is through, course 1, 2, and 3, whether it is through Udemy or you just recently purchased it and have a download link, you're going to get access to the brand new re-edited, revised, re-updated version for course 1 and 2 when it's released next year. But the people that do not have access to it, did not purchase it in 2019, you will never have access to the newly edited ones, to the newly updated ones that will have much more examples of live trading and many more examples of technical analysis that I've refined over the past few years. So I think that it's in your best interest if you are interested in purchasing it. And it's only for your benefit, in my opinion. It's purely for educational purposes. It has been known as one of the best 3 courses that are available. And for the people that have seen it on Udemy, it's quite awesome. I'm going to update it. If you want to buy it with fiat, you will pay a lot more for it. I'm talking about through Udemy because they don't provide the coupons that I want. But if you're interested in purchasing it by crypto, get back to me right away. Because as soon as the holiday season comes closer to near, you guys are not going to see me around much during the holiday season. So anyways, have yourselves a great night. Take care. If you are interested, Ethereum address is below. Just send the Ethereum or Bitcoin, and I'll get back to you guys right away. I'm a pretty reputable guy. Have yourselves a great night. Take care, and thank you very much for joining me for today's December 10th technical analysis video. Bye now.